Hey, my name's Jay Tuckerson. I hope you're well. This video is a little bit controversial. I don't know what you're going to respond to this or think about this one, but I want to talk to you today about why I think the interest rate rises are actually worse than inflation and why they're going to hit people that way bit harder. And it really baffles me why we are raising the interest rate so far. I understand fully we've got to beat inflation and we want to get that down to 2%. But there's not that many people that are impacted. It's such a slow process. And when you are hit, those that do get hit by the interest rate rises, they're hit for such a prolonged period of time, which is way worse, in my opinion, than they are being hit by inflation. So let's have a discussion on this one. I'd love to know your thoughts, comments and inputs, so do comment below. Before we get to that, do subscribe to the channel and hit the bell notification and smash the like button, guys. That really helps us with the YouTube algorithm. We're on target for 100,000 views this month, and only you can help by smashing that like button. So, inflation. Inflation. It's all we've been hearing for the last year. In fact, I first started hearing about it a couple of years ago because I was doing some renovation projects, and most people that I knew at the time didn't have any idea what was going on with inflation, but the builders did. And so one of the first people that were hit were things like timber. I remember plaster. We were doing a lot of plastering work and you couldn't get it. You just couldn't get it. People were selling £10 bags of plaster on eBay for £100, and plasterers were turning up at Wickes and B&Q at 8 o'clock in the morning, queuing up outside, trying to get that first bag of plaster because they couldn't work without it. Timber was really expensive, and it was really starting to be a bit of a nightmare. Then everyone else started getting impacted by inflation. And this was down to quantitative easing, the printing of money, the Ukraine war, things like furlough, and all these other schemes that we had have all contributed to record inflation or high inflation. We haven't had inflation like this since the 70s. Now, normally what you do in record inflation is you turn up the interest rates, and that puts a dampener on consumer spending. It's not quite working like that this time. We haven't gone into a recession. We're not expected to go into a recession, technically, but I think we pretty much are. And we're still cranking up these interest rates. Now, most of the inflation is on supply side. We can't impact that. We can't impact gas and electric prices, and all the costs are being put on to us. Now, people aren't going to buy less food and drink because prices are higher. They still need to eat, right? So putting these rates up is, in my opinion, not maybe the best thing to do. I think the government should be looking at places like Spain that were quite strict on companies and not allowing them to profit as much. And they brought their inflation down way faster than we did. And normally Spain isn't a country that you would look at as someone that's doing something right. But America's got it down fast. Most European countries have. We haven't. So I just want to give you some ideas on, or just give you a comparison on this. I've been looking at some figures on this. So the average mortgage that's been taken out in the last few years is £184,000. Now, a lot of those people were able to get rates at around 2%, right? 2%. So on a repayment mortgage, that would be £780. Which isn't too bad, right? Most people would have found that fairly affordable. Now, problem is interest rates have gone up so much, and they're as much as 6% now. Some people even higher, depending on their circumstances. So now they might be looking at a payment, or they soon will be looking at a payment of £1,186, which is a huge increase, £400 a month. Now, should they have been able to keep that deal there, during the inflationary period, their gas and electric was one of the big things that went up, and their food. But did it go up more than £400? Maybe, yes. I think yes probably is the answer to that one. Yes, the cost of a normal average person that's got £184,000 mortgage, their costs probably did go up at least £400 a month because of gas and electric, food, petrol, and all these other things. Now, remember, some of these things they don't need to pay for. So we have inflation on things like flights. If they haven't got the money, they're not going to be going on flights. Clothes, if they haven't got the money, they're not going to be buying lots of expensive clothes. But they are going to be paying for gas and electric. They are going to be paying for food. So I think on average, they were about £400 worse off. Now, that inflation is starting to come down. So that part of their situation is getting better. Their gas and electric bill is coming down. Food costs are levelling out. And hopefully they're in a sector where they've had, on average, one of these 7% pay rises. The problem is now we're asking them to potentially lock in these high payments for either 2 years or 5 years. And that's because we're saying, look, you need to get a new mortgage deal now. The deal is at 6%. How long do you want this for? Do you want to take a gamble and take it for 2 years? Or do you want to lock yourself in for 5 years, where this all could be gone? No one knows for sure, but it could all be back to normal in a year and a half or 2 years. In fact, we might even have way lower interest rates. No one has that crystal ball and can say for sure. And so what we're saying to people is, you need to lock in this pain for a lot longer. And I just don't feel that this is necessarily the right thing to do. Now, what's also happening is other people that rent, right? So a lot of people rent properties in the UK, and they'll have a landlord that will be hit maybe harder than this homeowner. I know we don't have many violins out for the landlords, but we do have landlords that have been on fixed rates. I've got one that's fixed at 1.39%, really good deal. And when that comes off, it will go to 6%, right? It will go to 6%, which I'll have to deal with at that point. Now, fortunately, I've got that for another 4 or so years, or probably less than 3.5 years now. But there are deals that people have that were on 2%, they're going to go to 6% or maybe 8%. Now, what happens is that landlord's payments could easily treble or quadruple. Treble or quadruple. That's going to get passed on to the tenant. And that's part of the inflation data. I've been reading about the inflation data. So mortgages, they don't come into inflation. But so when you finally give yourself a pat on the back, Rishi Sunak, and you're saying, you know what, I've got inflation down to 2%, your people aren't going to be much better off. They're still going to be paying significantly higher for 2 years or 5 years. So they're not going to be that much better off at all. But the rents are also going up, and that's going to get passed on. And rent is part of from what I'm reading, rent is part of the CPI data, the core inflation data, right? And so that means that if inflation is getting pushed up because landlords are passing on these rent increases. So my rant today is that I just don't feel this is the right strategy. And I'd love to know what you guys feel, because we have some good conversations on this channel. And all of you guys that comment, I personally reply to all of you up till 12 o'clock sometimes, replying to you guys. I really do appreciate your feedback. Let's have a conversation about this. What do you think is the right thing to do? Do you think we should be cranking up the rates even more just to beat this inflation finally? Or are you kind of this mindset that, well, you've increased the rates, now you're asking people to lock in these high payments for years to come? For years to come, either in increased rent or increased mortgage payments. No one really avoids this. I think it's a difficult scenario. Only people that are in a good scenario are people that are mortgage free in this market. Let me know your thoughts and comments below. Do subscribe to the channel and hit the bell notification. Like the video. We want to get 100,000 views this month. How can you help me do that? We'll go and watch this video right here.